Is Procter & Gamble worth your investment? And is Procter & Gamble the ultimate recession-proof stock? Ladies and gentlemen, welcome to Wealthdown. We're going to discuss Procter & Gamble today with me, Noble BM, founder of Wealthdown. And as promised last week, or in our weekend session of our portfolio review, I bought Procter & Gamble, and here's why, and here's my opinion about Procter & Gamble. So I invested almost $10,000 into Procter & Gamble. I've never heard about the company. Well, it's a major company. It is basically a conglomerate, holds a lot of brands like Pampers, which if you're a parent like moi, you probably heard about Pampers. By the way, best ever for baby. The other one likes Loose and Ninja Mans, I don't know. But Pampers definitely a brand, a recognizable brand out there. Then in the fabric care, Ariel, one of the big brands out there. Also Tide, recognized. Tide is a pretty much recognizable brand, I believe, for everyone out there. Then we have Puffs, always in different variants. Just then we have Brown, of course. Gillette, of course, for us men. Venus for the ladies. Then let's see here. Hair care. Head and Shoulders. Yes, recognizable brand. Old Spice. I didn't know that it was bought by Procter & Gamble. And so far and so on, check them out on your own time. But Procter & Gamble is one of those stocks that almost each portfolio has in it. Also yields a pretty good dividend. So let's talk about Procter & Gamble, and especially we're going to talk about the secrets behind Procter & Gamble's unstoppable branding power. Well, it's a dividend aristocrat and a income investor factory. Also, the risk you need to know when you're investing in Procter & Gamble, because inflation, competition, and slowing growth does impact this stock, and the full financial breakdown of the valuations analytics. So let's get started with, first of all, my position in Procter & Gamble, as I told you, is, well, it's 5.56% of my portfolio. I wanted to have it at 6%. I thought that this is not completely done. I was wrong. So maybe next time I'm going to increase it to 6%. There's my sweet spot for Procter & Gamble, along the 6% of my portfolio. But maybe it's going to grow, which it does. It did in the last couple of days, so I'm pretty proud of this move. So it's 5.56% of my portfolio, almost $10,000 invested in it. I have 8,848 euros at the current moment. Now, if you want to check out the entire portfolio, what I bought, what I sold, definitely check out the weekend edition. That's what I do on the weekend edition. I break down the moves that I made over the week and why I did them. Also, a little bit of risk analysis for the upcoming week. By the way, I'm pretty right for this week. So let's go over Procter & Gamble. So strong brand portfolio. As we already talked about it, over 20 brands that each generate more than 1 billion in income annual sales. So see here, brands in hair care, grooming, family care, baby care, fabric, skin, and so Procter & Gamble cares about you, as it seems. Visual aids a chart of. Then of course we need to talk about their dividends. So currently, let's go to their dividend. By the way, the ticker symbol is PG. So if you want to search for Procter & Gamble on the Nasdaq or on the S&P 500, it's PG, not PNG, but PG. Okay, so let's discuss financials, and first things first, dividends. So they have a current dividend yield of 2.44% yearly, and they did grow their dividend for over 67 consecutive years. Think about it. So dividend growth over 67 consecutive years, and it makes it a favorite. Basically, this is why it makes it a favorite among investors. They are investing in dividend stocks. So there you go. Pretty nice chart of their dividend increase. Also down here, it goes down to 2018, but 67 years. So it goes way back. Now, globally, they have a really large market presence with over 180 countries where Procter & Gamble is active. And in 2024, so basically last year, they reached 55 of its sales came from outside of North America. So they're really good covered for the entire globe, I would say. Just check this out. They're almost everywhere. So they're in Europe, of course, in Africa, also in Australia. Well, in Japan, they're not. In India, and well, they're all over the place. They're not. I think they also are in Russia. Yes, they are. Okay, so pretty well covered. Now let's talk about the innovations and solutions here. But before that, let's also talk about their resilience during economic downturns. So consumers continue to buy essentials like detergents, diapers. Believe me, we buy diapers, a lot of diapers, sometimes more than usual, and mostly more than usual because babies eat and then they explode. And toothpaste, of course, you need to buy toothpaste even through rough economic times. You better brush your teeth before you go to the dentist. Believe me that. And that's basically why Procter & Gamble is, well, not recession-proof, but they have a less downturn in a recession. People still need to buy essentials, and what Procter & Gamble sells are essentials. Now, on the innovation side, Procter & Gamble invests over $2 billion roughly annually in R&D, so launching innovative products to meet evolution consumers' needs. Now, 2 billion in innovation, that's a lot. But with their Gillette and their skincare, their detergents, and so far and so on, they do have to constantly innovate, because as soon as they make a bump there in a product, of course, they have pricing power. So let's also talk about the negative aspects. So we had the positive aspects. Now let's talk about the negative aspects. They are a bit highly evaluated. So let's take a look at their PE. Let's go to their overview. They're currently at a PE of price to earnings 25/7. Now that's a bit high, and it's constantly growing from, well, the highest it was in 76.68 in 2019, but that was a crazy time. And then it went down to 24, 24.5, 24.7, 25.72, and ending up in 27.4 2024. Now this 2019 is a exception, so don't go there. But anything else, it's a pretty high evaluation for, because that's the medium range for the S&P, and that just cannot be for a company like Procter & Gamble. So I would say underneath the 20s where they should have their normal PE ratio. Now they also have a very slow revenue growth despite its strength. Procter & Gamble is a mature company, and with low single-digit revenue growth, this limits its appeal to growth-focused investors. But they do have their increasing dividend, and they have their ups and downs. As you can see in a overview over the last 5 years, they went where they almost went nowhere with their price. Also, we take a look at their all-time highs. Well, starting with 1968, Procter & Gamble had a 11,250-ish evolution, so pretty good one. So let's talk about the rising cost and competition, because don't forget, toothpaste can be made by small companies, soaps can be made by small companies, heck, even razors can be made by small companies, and children underwear can be made by small companies. But they do have their pricing power. But inflation has driven up the raw material and transportation costs, so squeezing Procter & Gamble's profit margin, of course. Now, at the same time, competition from private labels and peers like Unilever is intensifying. As I said, let's be honest, as soon as smaller companies take up a sector of the market and invest a little bit into social media presence, throw a little bit of money to a couple of influencers, then it does nibble on the lower bottom of Procter & Gamble. So they also have currency risk, because they are so out there in the world, with over half of its revenue, remember 55%, coming from the international markets. Currency fluctuations can significantly impact earnings. A strong US dollar poses a particular risk. And of course, we do have now a strong US dollar. So seeing growth in Procter & Gamble for the upcoming years could actually be something positive, because I do speculate on a sinking dollar from its highs. I do think that the dollar is now at all-time highs. It's peaking, and I would say that we're going to see a decrease in dollar, meaning I'm going to see more revenue in Procter & Gamble. There's also a positive time for why I bought Procter & Gamble. Okay, so let's go over, let's do a little bit of financial analysis and go over a couple of key metrics. The market capitalization of Procter & Gamble is jumped a bit, a $383 billion US dollars, and it's one of the largest consumer goods company on the global market, so not US, but global market even. Now, the revenue and profitability in their previous earnings report, they posted a 82 billion in revenue with a net income growth of 18%. Now, if you take a look at their current statements for the first quarter, so they posted earnings on 1.88 shares for December quarter, and it's up to 1.84 for the year. Now, the sales increased 2% to 21.88 billion, above the Street's expectation, of course, of 21.54 billion. Now you can see it's pretty minimal there. So Procter & Gamble shares rose 3% on that report yesterday. The company recorded overall gains of 1% in volume, while pricing remained flat. So that's what I'm talking about. It's not a spectacular company when it comes to booming prices, but it's a stable one. Now, once again, back to their dividend history, its payout ratio is over 60%. Let's go to their dividend. You can see here it's over 63.03%, which, well, it's a pretty big payout ratio, but it does leave room for continued dividend growth. Next payment is, we have pretty important. Next date is 24th of July, and I'm expecting to get that delicious dividend from Procter & Gamble, which will be this time a $1.007 a share. So one share, $1. There you go, and a current price of $163 a share. So their debt level, with a manageable, of course, debt level to equity of 0.5, Procter & Gamble has the financial flexibility to navigate challenges challenges and invest in growth, of course. So I would say in conclusion, Procter & Gamble is a rock-solid company. Whoever wants to debate that, please leave it in the comment section below, because it's known for its stable dividends, it's known for its strong brands and global reach. So what can happen to Procter & Gamble on the short term? Basically not that much, because it's offering limited growth. Of course, that's a negative point there. And it's an excellent choice for defensive investors seeking steady income over long-term stability. So what do you think about Procter & Gamble? Is the buy, is the hold, is it a sell? Leave it in the comment section below. I would love to hear your opinion on this. Let me know what you think, and don't forget to like, subscribe. I'm Noah BM. Catch you next time. Bye bye.